The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 9th day of April. And it's my pleasure to be here, noon until 1 p.m. Eastern Time, Tiger Technicians Hour. Nice rebound today, and a couple of things are going on. If you're looking at this E-mini chart, you see that peak D on the 29th of January at 28, right there, 28.07, pulled back to 25.52. Had a strong rally for 3 days. Friday was quite a sharp pullback. We're having an inside day so far today. Nice action. What I said to subscribers to my opening call was a plethora of charts I started sending out Saturday morning, Sunday, Monday morning for my Monday. Let me just, sorry, I'm moving something around. For the Monday call, what I said was that there was a really good chance based on the Chapman wave trend gauge, which flashed a signal on Thursday to say that the Dow should be down early in the morning. Certainly was down, right? And then flashed a signal on Friday to say there should be a 9 to 11 point move in the futures, up move in the futures, the E-mini futures, the S&P E-mini, and that should translate into cash, the Dow cash and the S&P cash indices rallying intraday. So we've got a very nice move here. Dow's up 360 points at 24,299, back in the 24,200s, maybe even 24,300s the next few minutes. What's really important is you'll see this 120-minute chart right here, the patterns that we follow all the time, the cup and the arch formation. This is a cup and handle, suggested that there would be a nice bounce. And let me just expand this. I want to show you something. Within the left side, right side price time match, we had a move from 26.79s back at a peak D, the fourth highest peak in the Chapman wave on the 27th of March, pulls back to 25.52, round number low, and then goes peak ABCD, pulls back, and then it goes E, F, alternate count, going to a G. That G at 26.72.25, just under the previous peak D high of the 27th, this move on the 5th of April saw almost like a one-to-one lightning bolt pullback, and it goes down to 25.84.50 intraday on Friday. And then it had a really nice move to the upside. And what I showed for subscribers was a left side, right side price time match that said by about noon today, there should be a test of this level, and I drew it in right here to say that the highs that were made back at about 4 o'clock on the 6th of April in the 26.45 area should be tested. Now I can do this. I can add to it by going with another left side, right side price time match, and that takes you to right there, left side, to the plumb line low, to the right. And it says the 2672.25 level, that's a little bit much. It says that we could be there by 4 o'clock today, or at least today going into the early evening. I think that's getting carried away. But the 200-period moving average of 26.53 is possible today, and that's in the 120-minute chart. So now let's get out of this and let's get to the nitty-gritties. The nitties say that the Dow, INDU, trading at 24,293 up 360, is having a good session. Now it's above the 9-period exponential moving average, just up and down, had tremendous resistance there. Now it's support, and that supports at 24,163. It's going into a resistance area here, but if it's able to hold steady into, let's say steady meaning if it holds above 315 to the upside, at about 215, 230, that says there's a good chance that the close today could be quite strong, and that we might try to test at 24. Wow, 434 level of Friday. That'll be really quite something. The weekly chart has this long-legged doji. Very simple technique I have with a long-legged doji, which I articulated to subscribers to my opening call, my daily, very comprehensive newsletter. I say daily because it comes out every day. This is a template of the H pattern. It went to a lower low, but it closed above the high of the low of 23,360. So that makes 24,622 absolutely critical this week. As resistance, a close above it would be very positive, and a close below the 23,344 level this week would be very negative. I'm not sure what's going to get us there, unless there's another case of bad news. So that's the Dow. Let's go to the S&P, SPX.X. S&P is up very nicely, up 1.66%. Dow is up 1.54% today. The 500 stocks are stronger than the 30. I like that. We're looking at the S&P up 43 at 2647, now above the 9-period exponential moving average. Helps the monthly chart. That 9-period moving average of 2620 in the monthly is going to be absolutely critical in April. I think we will be testing it. But in the meantime, we've got a nice bounce coming at 2646. 2670 is the 9-period exponential moving average in the weekly chart. And I would have to say that 2636 to 2627 is now the key support in the next 2 days. QQQs. NDX 100. So this is fascinating. We are short from within a point of the all-time high, expecting this to be a pretty decent bounce. The Qs are up 4.05, up 2.5% at 160.68 because they've been pummeled. The 24,622 high that was made 3 days ago, I think that's going to be tackled this week. The weekly chart is acting much, much better. Monthly chart is way above the 9-period moving average. Excuse me. What I'm looking at here is that the Qs have tremendous support now in the 159s to 158s. So 159.70 to 158.30 would be support over the coming few days. So that's very interesting. We are short the Dow, and it's just subscribers say that they were stopped out on Friday. I wasn't stopped out. I'm not sure quite what happened. It did. I don't have anything going underneath the stop that was printed, so I'm going to double check that to see. Maybe it was one of those things where there were just enough shares taken out and the others were left in. I just don't know. I'm going to check that out. But we are still short the Qs, and we are now long the Dow on a short-term basis from this morning's low. And I'm expecting a nice bounce, a pretty decent oversold bounce. Okay, Qs, I just did that. Let's go to the IWM. IWM right now is up 1.30%, 1.96 at 152.33, lagging somewhat. It was holding better, but it's not acting better. So this is going to be very interesting because it's got 150.150 to 150.90 as key support over the coming 2 days. There's a chance it's going to try to tackle the high of the 5th, which is 153.61. I'll come back with gold. I'll come back with the dollar. I'll come back for the euro and the yen and crude oil and of course bonds. It's Basil Chapman. Dow's up 24,300. Up.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So we're looking at the IWM, and now we're going to go look at the TLT. I want to do this right now. TLT is down 62 cents at 120.48. This is going to be very important because if you look at the TNX, which is the 10-year yield, what we're looking at is it's holding in the low register. It is, you see this trend line right here. Let me just double check. I believe that should be okay. Coming up. Why is it so slow? Oops, did I? Oh, there we go. Yes, so that's the settings. It's going property. I don't know what's going on here. All right, let's just do that again. We want to know what that moving average, that's the 14-period exponential moving average. It's held the 14-period moving average. That's the weekly chart of the 10-year T-note, the TNX yield. That's very important. If you look at the monthly, this is a pretty darn good monthly chart, bullish chart in the TNX. This is going to be very important because I'm suspecting that if anything, it's going to be yields that kind of make the market, kind of spooks the market. It hasn't crossed positive in the daily MACD. Stochastic is good at 38%, but that's just, it's good because it's rallying, but it's really not a good price. It should be above 60%. Then I'll say, hey, should see more upside. So I'm watching this closely. Why? Because at 28.34 on the 5th for the high, big red candle on Friday down, nice candle today, but an inside bar. If there is a close nicely above 28.34, in other words, if it gets above the gap down highs, around about 28.54, oh, sorry, 28.54. It's at 28.05. At any point, if it starts to trade, just double check, I want that exact price. If it starts to trade in the 28.60s, I'm going to suggest to you that the weekly chart is improving and that the long-legged doji could see a close above the wick high of last week of 28.34. 28.34. Last week, 28.34. Last week, 28.34. Yeah, I just wanted to make sure. Yeah, 28.34. So the high was 20. So for 28.12 today, so 28.34. If there is a close in the 28.50s, on any day. No, it doesn't have to be a close. If there's a price move to 28.50, 2.85 in the 10-year note, I would suspect that that's going to give the market a little bit of a scare. And that's what we're watching. If there is a pullback in the next 2 days below 27.50 in the TNX, let me just make that the TLT going up. If the TLT, so if there's a break on the downside, that would have the TLT going to about 121.65. It's at 120.51, so about 1.25 points higher in the TLT. That would say, no, yields are coming back down. So this is a very important moment, I think, for yields. Let's go to the crude oil. Crude oil at this particular point is trading up $1. Oh, what a whoopee crude oil market. Crude oil is up at 63.41, up $1.31. The MACD is negative, the stochastic's negative. The weekly chart suggests trading band with 64.50 resistance, and it better hold 61 to 60, that area 61 to 60 as key support. If it goes under, that's going to be very negative. So far, chop, chop, chop in the sideways range. Now we're going to get to the dollar, DXY. The dollar on Friday pullback. The dollar today is down 23 cents at 89.90. 90.04 is the 9-period exponential moving average. Now, my contention has been that gold right now, is up 0.03. That gold is stuck in a range. I don't see it breaking down as such, but I see it more in a range, and that I saw the dollar, and this is just a guess on my part, that there's a chance that the Fed might want to use the dollar as a whipping boy. So that to do with the GDP, to do with a whole bunch of economic things, they might want to just push the dollar higher for a little bit just to test it out. But at this point, it needs to go to the 91.20s before you can really say that there's a trend reversal of significance in the dollar. Right now, chop, 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 just like gold's in a choppy range. So I think the dollar's in a choppy range. Wow, this is a tough one. EUR USD, this is the euro-dollar currency pair up. Oh, that's actually quite nicely. It's up at 1.231, up 0.003. Yeah, just stuck in the range in the weekly chart. A monthly chart is holding pretty darn well, and we'll see, because if the euro USD, the euro itself, can push above 1.236, I would have to say that that's good action. The USD JPY, which is the yen dollar currency pair, is holding pretty nicely. No big deal, but it's holding towards the upper range. So the currencies are, I'm seeing mixed pictures in the currencies, and they're fluctuating week to week, but they're still within ranges. Just rectangle trading band. Now I want to go to something that's very interesting. The VIX index closed Friday nicely above the 9-period exponential moving average, very well above the, this is a weekly chart, above the 200-period moving average of 14.55, that was 19.33. And even now, it's only down 92 cents. It's down minus 4%. But at 20.56, it's holding pretty well. I think there are a lot of people wanting to buy insurance here. They're just saying, you know what, I need to be covered. I need a little insurance policy, and the VIX is the way to do it. Let me make it clear. The long-legged doji of Friday suggests a close above the high of Friday of 23.12 would be very positive for the VIX, very negative for the market, and a close below the low, gee, I don't know what's going to get it there, 18.60 would be very bullish for the market, negative for the, not very negative, but negative enough for the VIX index, because from there, it could drop very quickly into the 16s. So we're going to be watching the VIX all day today. Now, I got a couple of questions, and the questions were, yeah, so I will be checking out the DOG. If you were out, you're out, but I haven't had anybody else say they were out. And it could have just been one of those wild trades. It just takes you out. There's X number of shares that are for sale, X number of shares to be bought. Boom, it just gets taken out. I'll check it out. I don't like to have, I like to be in concert with everyone. So at this particular point, I'm still going to say that we are short the Dow from 25,400. I'm not sure how it could have even hit that. It didn't get close. Anyway, we'll check it out, but you were stopped. I always respect that. Now, this is what I want you to look at. In the markets, if you look at the SMHs, nice move there, up 3. Lousy moves for 2 days from Thursday into Thursday's high into Friday's low. And yet, look at this nice move. And I drew this arch formation, and I said, I would like to buy the SMHs on a short-term basis, and I would buy the 3-to-1 long, but there was a good chance that we would get our long 3-to-1 position in the Dow, which is what we've got. So the SMH is actually up 3%, up 3.05 and 1 or 2.51. Would have been a better trade, but I just needed to be overall conservative a little bit here, thinking if this is more a bounce. So we'll be back talking about certain stocks when we get back. Some very interesting things happen.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just before I forget, I was looking at this over the weekend. Corn has had a very nice move, and today just snuck to a new recovery high. CORN, it's the 2 corn fund, is trading at 18.17. I think it can go a little higher here. What's really important about this is that the weekly did that arch formation, left side, right side price time match very nicely. And this has gone to a leg B. This is a regular blue B in the weekly chart, and it's a leg A in the monthly. It does say that the monthly is really trying very hard to turn up, and it has 17.80 to 17.10 key support in the monthly chart. So yeah, corn. Question I had about, where did it go to? question I had about, Venom, Venom, VNOM. Venom is the Viper Energy Partners LP. This is so interesting, just like it's in its own world. Peak D in the daily at 25.98 right now, up 80 cents. A leg GSC in the weekly. Now, one of the things about this particular candle says that there could be a little bit of a sideways move. And what I say to Coda in the den is that the 2420s to 2370s support is very important, and it's at 200 period exponential moving average in leg D in the monthly chart. So this is something to keep in mind. But what's also very important about it is that if the weekly candle holds very nicely all the way through the week without taking out 2490 support, in fact, it holds well and closes towards the high this week, I would have to say that that weekly chart is suggesting that the 28th is going to be in play within 7 to 10 days. I'd say 5 to 7 days, in fact. Okay, next question I had was Boeing. Yep, let's look at Boeing. One of Boeing's up nicely today. I'm only up 342 at 33.29. Now, I think that Boeing, regardless of what news is coming along, I think Boeing is just kind of, how can I put it? I think it's had its major move to the upside, and regardless of the news, it's going to consolidate. I really think that that's what the chart is telling me. I'd put a trading range between the all-time high was 3 right there, right? What is that, 371? Yep, 371.60 on the 28th of Feb. And I would say to you that the trading band that I'm looking at is 339 to 343 upside, best case. And the downside, if it takes out 310, it goes straight to the 300 level, which is the 9-period moving average on the monthly chart. That, in fact, is my target for this particular first phase of the consolidation for Boeing, 300, 301 to 298. Next question I had, Caterpillar, CAT, was acting quite nicely, and then it got knocked on its nose on Friday. It had a high, it had a Chapman wave 2-bar reversal from 173.24 to 173.10 highs back in January. And then all of a sudden, what was that, January? Yep, January, the week of the 19th, and then the following week, and then it pulls back real sharply. It makes the A pattern. Sorry, it makes the H pattern within that. That's an A pattern. And then pulls back and closes below the left side low of 142.88. Close of 142.99. I'm sorry, 11 cents higher. This is going to be very important because it's under the 9-period moving average. I think Caterpillar is also stalled out here. I think it's got a problem. I think Caterpillar is in a large hat-trick top right now. It just needs time. I think it might need another couple of months to build some kind of a base. Next question I had is Opus interest on the put on the ES Mini 2600 strike June expiration. So let's see, the question is, let me just do this. The S&P going out to June, this is what I'm looking at. This is what I discussed with subscribers over the weekend. If you look at my weekly charts of the down the S&P, a couple of things are going on. These weekly charts are suggesting that rallies will fail, and there's a real good chance that the S&P, the Dow's already done it. The S&P will test the 9th of February low. In this case, the low of 25, what was the price? 32.69. It might take a little while to do that, but that's my target for the downside. I would say 2665 to 2680 maybe is what the upside. There's a potential that we could go that high even in this bounce, but I'm looking at an arch formation, a second arch formation unfolding for a retest of those lows. Next question I had was UTX. Now, this is going to be very interesting. I've been reluctant. I wanted to buy for subscribers to my opening call my Dow Quartet, at least a couple of the Dow stocks in the Dow Quartet, not GE, but and even IBM, which had a very nice move. That candle, I think it was Wednesday, huge candle from the under 148 to over 155, and then boom, pulls back sharply. Now a nice candle. I considered IBM. I think IBM is in play. You remember Goldman Sachs, IBM. I've got these sleepers that I think that were fantastic winners over different decades. I think they'll be back. I just don't think it's right now, but it's a very nice move up, 2.24% in IBM right now. But I think it's a counter trend bounce. GE, IBM, M, and UTX. Nothing to see here, folks, in M, multinational conglomerate. I think it's just kind of stuck. Yeah, we could bounce from the 215s where it's at now, maybe even to the 223, 200 period moving average resistance in the daily. But I think it's going to start to pull back again and make an arch formation. And UTX is the same thing. United Technologies, M, 3M, and United Technologies just kind of stuck here. They were big leaders. They need time. Remember, my thesis has been that the great winners, the stocks and the indexes that were the best winners over the past 2 years, 3 years in some cases, they deserve a well-deserved break. And that's just the way I'm looking at it right now. So I'm looking at, I missed it now. Oh, Google. Google, this is Alphabet. This is the Goog, not the trading shares. Trading up now at 29 at 1,036. Yep, you can make a nice little cup formation. I can see Google going from the 1,036 level to the 1,060 to 1,080 level, and then we're going to have to reassess. I can see Amazon trading up 28 at 1433, trying to rally, not as good. I think Amazon is. I would not be surprised to see Amazon make a hat trick top. The monthly chart has not yet made a PE. I think it will, but 1285, that 9-period moving average, should be fantastic resistance support between 1320 and 1285. That's going to be key for me if Amazon does get down there. What happens there, and then what happens to the Qs? Going to be very important. Facebook up 266 at 159.86. Nothing to see here, folks. Just a bounce after coming down really sharply, even a greater than a 1-to-1 expansion to the downside in the weekly chart from the 195 high, all-time high. Yeah, it's just, it needs a break. I'll be right back. Dow's up 339, S&P's up 39. Basil Chapman, Tiger Technician Zone. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. I was asked about crude oil and the transportation index. Yep. So USO is in a sell mode in the daily chart, but I technically I should call it a sell mode in the weekly chart. But all I'm going to say is that when stocks make this particular pattern and they make it very clear, I'm just saying it's a rectangle trading range. I would not be shorting on a very short intraday basis. If you want to do some trading, sure. No problem with that. But at the way I'm looking at it, if crude oil, the USO, this is the United States Oil Fund, if it gets over 13.05, somewhere around there, I'd say that's where you can take some money off, or you could even think of shorting with maybe a 40-cent stop. Well, not even that, I have a much tighter stop. And then it should be coming down. And if it gets to the $20 to $12 area at some point, maybe that's where you want to buy. I'd probably say a little lower down for the make the rectangulars. I can't go all the way to the bottom in the 1150s, but I would say somewhere here between 1205 and 1185. Probably that's where you want to be buying it. If you're wrong, it's going to pull back. But this is a bouncing area. And that's the same way. I mean, if you look at CVX, which is the multinational Chevron Corporation, oil company, look, it got into a trading band, and this trading band should remain in place. It's almost the inverse of the chart we were looking at of the USO for some reason. But this is making a low-level consolidation. The other one was making a high-level consolidation, but still all within a rectangle. So all I'm saying is that trading, that's what I'd be looking at. IYT, now it's going to be very interesting. You see, IYT is up 1.2 today at 183.65. Lousy chart formation. It took out the low. Oh, it went under the 200-period exponential moving average in the daily chart on Friday. Now it's a little bit tiny little inside bar up $1.19 and 183.60. But it's the H pattern in the weekly chart that has me concerned. Until it decisively takes that 187.55, that's another 4 points higher. I'm just going to say no. I see this is a problem for me, and that's the reason why I want to be remaining short the indices in the bigger context. Short-term trade, fantastic. Just go in for the ride, see if you can get it, and then just raise your stop. Let it take you out. Sometimes you have these huge overnight positions, but the XAL is really struggling. Look, this is the same rectangle formation we looked at in crude oil, except this is going to the lower part of the band. Crude oil was at the higher end. So I just see the IYTs not being helped much by the airlines, and I want to see the airlines do well. I want to see the IYT, the iShares Transportation Index, screaming to the upside to confirm that the market's back in a bull mode. I don't see that for now. I just don't see it. So the XAL airline index up 14 cents. Lousy action today, actually. If you look at CSX, which I haven't looked at for a little while. Yep, there it is. Same thing. Gets off the 200-period simple moving average, bounces, stops at the 9-period moving average, weekly chart, sideways move. I don't see anything yet, but if you look at the weekly chart, monthly chart, nice action, holding the 9-period exponential moving average. So the rails and the truck is why I think is the truck. Let me see why. Allegheny Corp. Is it YY? YY Inc. I think YY Inc. is the trucking company. For some reason, I'm just blanking out. Usually I know the names. For some reason, I'm just not getting a trucking company right now. But yeah, we'll see. I do think that the truckers are going to do, going to give us a lot of information. Remember, we were talking about CTAS. This is Cintas. Cintas, CATS. I must look at that again. CTAS. CTAS trading at 169.71. It's in a trading band, and this is the overall Cintas Corporation, overalls, uniform, rentals, etc. It looks to me like that weekly chart is really struggling, and the monthly chart is good, but it's got a long-legged doji, so I have my parameters to watch. But it's the daily that just says, look, it chop, chop, chop. Yeah, it's up 2.97 and 169.71. Watching this one real closely because as an informational thing. If you look at URI, which is the rentals company, United Rentals, stuck. And these are the things that should really be working. Let's look. I had a question. Would I look at UAL? UAL, which is United Airlines, stuck at the bottom of the range. Monthly chart. Let me just have a good look at the monthly chart. Made a peak. D spiked up. Is this an F? Is this an EF/B? F/B? I'll do a little more work on this. I've got a feeling that this could be a failure pattern, but in the meantime, it is in the higher range. So Delta Airlines is, United Airlines holding pretty well on the monthly chart, but the weekly is just stuck, and the daily is saying I'm really struggling. DAL, Delta Airlines, a little weaker daily, a little weaker weekly, and the monthly is kind of the same. Okay, but it looks to me like it's going to be pulling back from here. Whew. So that was the question there. Where's another question I saw? Was it typed in somewhere around here? Would I look at Tesla? I had a couple of people talk to me about Tesla over the weekend. So I have a friend whose son works for the SpaceX program and just loves what's going on there. Just can't wait to get to work every single day. I think there's also the kid. He's just a fantastic, brilliant kid. He's always been excited with space ever since he was a kid. So maybe that's it. But he thinks Tesla's doing a fantastic job there. You can't really tell by one employee. So one employee. So what we're looking at here is the 200-period moving average of Tesla was hit exactly last week, twice in 2 weeks. Spirals up to the 9-period exponential moving average. Remember, folks, Tesla is a story stock. This guy, Musk, is probably a little bit, just a little bit, I say, I wouldn't put him into the same category, but a little bit like Edison. Remember, Edison, General Electric is Edison. This is, it's very important to remember that Edison is the guy that was able to implement, he was able to take inventions, his own and others, and turn it into saleable products, into businesses, major businesses. And he was bought out back in the turn of the 1800s to the 1900s. And then, Edison was perhaps one of the most lucid creators of design to product implementation entrepreneurs that we've seen. And that's different. Now, when you come to Musk, in a sense, he's a little bit like that, but his debt is probably going to catch up at some point, the debt that is owed. I don't know how he's going to be able to pay it back, but he has a way of moving from one thing and piggybacking all the way through to different products. So I would not be surprised if the whole aspect of producing these rocket ships and then turning whatever vehicles he has up in space, turning them into some kind of satellite, and just knocking the whole internet broadcasting arena like he did with Tesla, with electric cars, just turning it upside down. And that could give him another 6 or 8 months or 6 years. Who knows? I'll be back, guys, at 373.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation, as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
I had a question about Skechers USA. Yeah, it's very interesting. Some of the apparels are holding very nicely. So Skechers is holding well. It's near the top of the range, got a rectangle formation. I think it's just kind of stuck here between 42s and 38s for a little bit longer. If it breaks under 39 in the next 2 days, that'll be a negative. But if it just holds here, that's going to be positive. If it breaks into the 42s in the next 2 days, that's going to be very positive. I think it's just stuck here. Monthly chart has really improved a lot. So this is good. Would I buy it here? Gosh, this is tough. I would probably say if you're interested in another sector that's holding better than the others, then small position, fine. You could have a 5% stop on a small position. I think it'll tell you very quickly whether it's going to work out. So that's the question I had. What I want you to do is Macy's. So Macy's right now is, where did it go? Macy's, please. Thank you. Down 24 cents. Also, high-level consolidation after the really big move from the teens into the 30s. I'm looking at it and I'm saying, I think it's also kind of stuck in this range for a little while longer. So keep in mind that some of the retailers that were just buried and really they were in real trouble have come back very nicely, but all at the lower end of the multi-year range. So RTH, the market vectors ETF, I'm watching the same sort of thing, but it did make a lower low in the H pattern. This is the RTH, it's trading at 92.77, up 45 cents. So I'm really watching it. I don't think there's anything, but it might not break down. Remember, we're looking at crude oil where the technicals deteriorated, but the price held. Then the price accelerated, the technicals improved, and it's still stuck in a range. So this is what we might be seeing in the RTH for at least a little while now, at least a little while to come. Don't forget this week, Steve Rhodes has a webinar coming up. Should be a wonderful webinar. Check it out. A couple of things that we want to look at also is within the context of the markets, how we close today is going to be very important, and where the VIX is tomorrow afternoon into Wednesday at this time, that's going to be for me a very big clue. It's down 94 cents the VIX, but still right near the 9-period moving average in the daily chart. Well, there we are. We've got the end of the session. Stay tuned. I'll be back tomorrow. Have a great day. Stay tuned for Steve, Dave, Tom.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.